Good afternoon, everybody. It is July 12th, and we finished the day at all-time highs. Yes, we touched them in the Dow Jones, and it was quite impressive to say the least, except for the fact that it did it on lower than average volume, both on New York and the NASDAQ. Now, I don't want to take away from the fact that the bulls are clearly in control at this juncture, but it's not happening with the conviction of volume. So that leaves a taint of skepticism about where the next catalyst is going to be. So let's just dive in real quick, take a look at some stuff, and give you some context on today's movement, and then we'll set up tomorrow. Taking a look at the volatility complex. For those of you that are new, use this as your barometer of fear. But I use this as a strategy selection tool. When vol is low, it helps me understand what strategic approach is based on my directional bias, whether it's bullish or bearish or neutral. And right now, vol came off 60 cents. It's at 1030. It's at historic lows. You know, we're getting close to that single digit area. If you actually look at it, it's now trading below its 20 and 50-day moving average. Context, folks, those are used to show who's in control. And right now, the volatility bears are in control. So there's not an expectation of big violent moves in the market. Does that mean that they can't? No. We're a headline away, I guess, from potentially a market move. But we're also walking into territory of earnings which could move the markets. And we're going to talk about one notable name tomorrow that we'll be reporting. But the Dow Jones Industrial came off of its best levels today. As a matter of fact, you saw it, the high of the day today right here was 21,580. That is an all-time high in the Dow Jones, and it pulled back from there. You can see that the diamonds finished the day up 0.5%. So not a huge move, but again, like I said, it is a move that hit all-time highs, but on lower volume. The S&P 500 also hitting levels that we haven't seen in a while. The high was 2445 on the SPX cash. And we saw it pull back, but it finished the day up, 0.75%. And then finally, taking a look in the large cap realm, the NASDAQ. The NASDAQ finished up 1.21%. Large cap tech really picked up. But what was interesting, though, is that if you take a look at Apple, Apple did recover from its lowest levels this morning, but it's in that battle zone. It's actually below its 50-day moving average, and it's right at its 20-day moving average. This is in a big, fat consolidation, and it's going to be very difficult to see what's going to start pushing Apple to the upside, especially with some of the competitive landscape that Amazon is starting to grab. We're going to watch large cap tech, especially as we get into this earnings cycle. Amazon up another 1.25% over that $1,000 threshold after what was a record-breaking Prime Day. Again, I'm not seeing the volume that I would like to see. There is conviction by the bulls. They are taking the upside, but we're still at levels that have had, the stocks have had difficulty getting over. The Russell 2000, which was leading for most of the day, pulled back towards the end of the day, did finish well into the green, and you can see clearly that the bulls have retaken control on both the short term and the intermediate term. But one note here, financials are going to be reporting. Watch next week. You're going to start to see the large banks. We did see some small banks report. Bank of Ozarks, I know most of you are like, whatever. But that is important to watch because those smaller regionally based banks are going to give us an idea if interest rates don't start moving to the upside at the pace that everyone thought they would be, if we don't see growth, if we're not seeing these infrastructure projects, if we're not seeing small businesses growing, these banks could suffer. Bank of Ozarks came in line as far as expectations of earnings. But if you want to look at the regional banking sector, look at KRE. That is a ETF that tracks regional banking. Look at this, down on the day. So you got to watch this stuff. Even though the markets are hitting all-time highs, we could get a little complacent. And we're starting to see maybe some yield flags, some yellow flags. That yellow light, do I keep blasting through. Well, we didn't see that conviction of people buying into this latest leg to the upside, even though we're seeing all-time highs in the Dow 30. Taking a look at the commodity space, crude, I'm telling you, we had another draw today on the EIA report. 7.6 million barrels was drawn from storage, so that would be bullish, and the initial reaction was to the upside. But we continue to see that the output, the production, is ramping up here in the States. That means that while we're pulling out, our production is up almost 60,000 barrels a day. So we're at 5-year highs as far as average storage is concerned. So we have a lot of glut of inventory that we have to work off in the crude markets. Now, we did see that gasoline stocks, the stuff we put in our car, and distillates, both had pretty decent draws of well over 1 million barrels, but we're still seeing increased production. Watch the rig count at the end of the week. That will determine if we're going to continue to see oil moving to the upside. We did see gold moving to the upside. Despite the dovish commentary coming out of the Fed, gold's still moving to the upside. And we saw that copper trading in that 268 level, that 270 level, 272 level, that's going to be a level that if it starts to break through there, that's going to be real positive for the industrials and materials sector, as well as a good catalyst for potential infrastructure ideas, as well as areas and sectors like housing and so forth that have had good numbers, but we're going to want to see some progress in areas like copper. Taking a look at the bonds, and this is where we had a little bit of a conundrum with the recent highs being met. Bonds moved to the upside in price. That means that yields came down. That typically means money is going into bonds. That is not necessarily a bullish endorsement of the new highs. Now, yes, we have had bonds and stocks going up in conjunction with each other, or in other words, at the same time, for quite a long time. But the point being is that bonds took a pretty precipitous drop over the last 2 weeks, firmed up, and now are moving to the upside. Over the 200-day moving average, challenged the 50. If it gets over this level on TLT of 124.15 and then challenges 124.66, that could be a sign, and we could get those kind of moves with earnings on the forefront and the fact that the Fed is signaling that they may not be so apt to raise rates. We're going to watch the Fed funds tool on the CME to see if that gives us any heads up. But we're looking at the 2-year, the 10-year, and the 30-year, all up between 0.3% and 0.7% on the latter end of the curve on the 30-year. That's just telling me, folks, that while the upside is the current trend, and it doesn't look like it's going to have much headwinds until we start getting into this earnings cycle, I want to watch this because I'm seeing a 2-year yield now challenging 2.3%. It finished the day at 2.32%. This is a yield that has to get over 2.83% by early 2018 if we're really going to see some momentum to the upside and a true shift. And it's going to be very interesting to see what the large cap bank heads like the likes of Jamie Dimon are going to start to discuss as far as this huge $4.3 trillion book that the Fed has to unwind as far as bonds and mortgage-backed securities. If they're not going to be raising rates, but they're going to be potentially aggressive on unwinding that balance sheet that they've basically built up since the financial crash of 2008, they're going to unload this stuff into the marketplace. The marketplace has to absorb it. Who's going to be buying this stuff is really going to be a critical question. And once that money starts to roll off the balance sheet of the Fed, where's the future backstops and catalysts going to be coming from? And that's going to be a huge question mark going into and through this expiration cycle and into the remainder of this year. So we may potentially, who knows, from my lips to God's volatility ears, might see some volatility, but we'll have to wait and see. Right now, the bulls are clearly in control, and we will be following all the action overnight and reporting on it tomorrow morning. We will be talking about the Asian markets. We'll talk about what's going on in Europe, and then we'll take a look at the opening here in the U.S. Join us here at MarketStream.live, and please send your feedback. Go check out our site. give me some commentary, thumbs up, whatever you can do to start showing that you're starting to like what you see some actionable stuff. We're going to build out a lot more content, but we do need your support and your feedback. So please, we look at that and we really appreciate those of you that have sent feedback. You can do it either on our Facebook page. You can send us emails at info@MarketStream.live or my personal email address at jcusick, JCUSICK @moneyblock.com. All right, folks, have a great evening, and we'll see you tomorrow here on MarketStream.live. Bye-bye.